Overall, I'll be talking about ventures, so that's my specialty. Okay, I won't speak about the mid-market activity of EIF, but what we're seeing on the venture side is that the LP appetite for VC funds is growing, and the main reason, the underlying reason for that is that the financial performance of the VC funds is finally coming to a level which makes the asset class, if I may call it like that, attractive for private investors. We're seeing a growing number of fund managers who have big successes in their portfolio. They're able to translate those big successes into meaningful returns for their investors. So concretely, we're talking about a population now in Europe of some 50 fund managers in VC, in digital, in life sciences, who are able to disclose a performance of a double-digit net IRR, so more than 10%. And that's the kind of figure which will attract and is attracting private investors back to the asset class. So for those fund managers who have been quite long on the market, who are the more established ones and in the more established areas of Europe, they are definitely seeing an improvement in their fundraising. For private foreign LPs, not yet, I would say. The market is in Central and Eastern Europe is definitely maturing. It is catching up with Western Europe and the rest of the world. We're seeing a number of unicorns emerging out of the region, like Taxify recently in Estonia, UiPath in Romania. And of course, these exits and this higher valuation having a positive impact on the financial performance of the VC funds which are backing those companies. But the market is not mature yet. It will only start, I guess, from now on when we see an improvement in performance. It will start only now on that private investors from Western Europe or the rest of the world will be looking at the CE market and the VC segment. That's what is missing, is the majority of the funds which are fundraising now in Central and Eastern Europe are relying still on EIF, the Jeremy programs, EBRD, IFC for certain other regions. And there is a lack of private investors overall in the region. So there is a lack of pension funds, sometimes due to regulations. I think in Poland it's the regulation which is preventing the pension funds. But what we're seeing is progressively some family offices are becoming interested in the asset class. They have, of course, to understand how the model works. They have to understand that there is a LP-GP structure, that being an investor in the fund means that you're not in control of the fund, that the management team have to stay in control of the fund. But this is progressing, but I would say that's one of the main areas of improvement in the region, is that we should find a way to attract those local private investors into the local VC funds, because without the local public support, without the support of EIF, and without the local private investor, I think it's a lost game to go on fundraising abroad if you don't have the local support of your private investors. Well, I think I see it more as complementary. What we're trying to do at EIF is to make sure that the whole value chain on the European landscape is completed. You need local VC funds who will be more early stage, seed stage, Series A, who will be contributing in the heavy lifting exercise of investing in those very, I would say, early stage immature companies. But at the end, you have also to have a later stage players, and that's why you find more pan-European or pan-CE funds being active. So it's not one versus the other, but I would say it's one together with the other who will allow the further maturity and the positive evolution of the VC market in the region.